Hey, how's everybody doing? It's Jeremy, Lil Rochester, J Leo. Looking to do an outlook. First one, new setup, new mic, new everything. Um, so let's see. I've got a couple of, well, not a couple. I've got like 12 or 13 different um markets that I'm in right now. I'm actually just trying to find something that I have not marked up, have not looked at, and see what we can see. Um, I think I've done U.S. Brazilian real. No, I haven't. Good. This will work. This will be perfect. 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 Okay, so I'm on the 5 minute time frame. I use basically. I'm not gonna get into specifics of strategy in terms of what I use, but um, I guess the best way to explain it or to describe it is I'm basically just looking at uh, institutional order flow. Just is about as cut and dry. So basically, what I mean is, for every opportunity that occurs on, say, people that trade off of the 1 hour, the 4 hour, the daily, the like whatever that is, um, I tend to just try to zoom out and see if I can gauge where the institutional order flow is headed. Now, immediately, I would probably look at this and say, okay, um, because of this break and clear, that's another break and a clear. I would immediately think, okay, this is short, right? So I would be looking and say, okay, this is probably liquidity low or my target here. That's close enough. Um, this would be like my intermediary protected high. And all I mean by that is essentially uh, if price is to push long and it reaches this level and breaks this level, I'm no longer looking for short. So this is basically my point of invalidation for myself. Um, from a again from a structural standpoint, and then utilizing that same premise of zooming out and looking for order flow. I personally take a 50% of the zone from a 5 minute chart just to kind of give myself an area and an idea. So I think my approach sometimes is simplistic. It's almost sickening to some degree because it can be very simple. Um, and it's just like any other kind of trading or you know plan. It's not 100%. It's not foolproof. I get shit wrong all the time. Um, but in my opinion and in my book, when I'm wrong, actually it's a good thing because all you have to do realistically in this simplistic approach is just to be wrong once. And if I'm really good, I'm wrong twice. That probably doesn't make sense to you, but so, anywho's, I would be looking for price. I wouldn't even be looking for a short here. I'd be waiting for price to get somewhere in here. I think I already have because this is a free. This is not my paid um, trading view where I actually have. I can go down as you can tell here. I have a basic plan. Um, I don't have this where I can have multiple alerts set, but let's try it because I think I already have one. Yeah. See, yeah, I already have one set up. Do, 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 do. Yeah, so that's active. If That's a good tool. Like some people I realize that use TradingView have no idea what any of these buttons are on the side. So your watch list, give you all of your pairs. If you have an alert, the alerts go in here. There's even an alert log that you can have that some people don't know about. This is a data window for the market that you're actually in. Show you the high, the low, close, date, time. I mean, you if you're trading, you kind of know what this stuff is. The ones that on fire, up, up or down, bullish, bearish, doesn't matter. That's a calendar. If you've got ideas, as you can see, I've got a couple in here. And as a matter of fact, the one alert that I have is actually on pound Hong Kong dollar. Maybe we'll come back and look at that in a second. Because honestly, and as you'd like to say, really and truly, there's really nothing else to do in here. Now, let's see, based on where this is, let's get a pip. Um, let's see how many pips this is. 5 minute, it depends on range and a couple of other things. So if I just absolutely felt like I had to trade this, I would be risking. That is ridiculous. That is so ridiculous. 1848. And again, it's you look at the spread. So again, this is on my paper trade account. This isn't a real account. Spread's too goddamn big. It is too much. It's just too much. Which is again one of the reasons why I would, if I had to make a suggestion to somebody that was saying, "Hey, what markets can you test, or would you back test?" Me personally, there's always the conventional wisdom that says test the markets that you want to become familiar with, how they move, and that's 100% correct. You don't necessarily have to get into every market. Um, However, I would always, in my personal opinion, because I've done it and I do it, one of the things that I like to do is test different markets, whether it be indices, if it's currency, even if it's cryptocurrency. On average, all markets are gonna move with similar intent. There's always gonna be some kind of what could be a liquidity sweep. There's always going to be a weak to strong hand transfer. There's always going to be some level of mitigation. There's always going to be something that's going to show you basically the precursors of the move that is to come. So sometimes you'll see a setup if you've been watching something long enough. And I actually did this. Well, now that we've got this set up and you see that that's not the greatest RR. So it's a 1.96 to 1. So let's just set this here for a moment. And let me see if I can go back to, I know it was on Euro USD, but I don't remember if it was 8 cap or not. I don't think it was 8 cap. I think I might have done it in Owanda. It might have been Owanda. But what I want to show you is if, like I said, if it's in here, I may have, yeah, I don't think I did it in here. I know I did do it on gold, so and I did it on this one, I believe. Yeah. So I have to take you to a higher time frame so you could actually see it. Like I said, I've got things a little tricky. So basically, when I talk about moves and catalysts and things like that, so what I ended up doing, and I can slide this over now. As you can see, it's a good thing that this is recording. I like to do it this way so it doesn't look like you could say, "Oh, well, you set this up before you." Yeah, well, I don't have that kind of time. I really don't. And even if I set it up before I started recording, this move has been going on since the 1st of February. So here's my point, and I realized again, I don't trade the time frame. I trade the price action and what price is undergoing. This is why I use the 5 minute. So you could trade any time frame you want. It's like, I don't want to say time frames are irrelevant, but they're relevant for price movement, but they're irrelevant for a specific set this is the absolute best time frame to trade. Like that concept and that idea, just if you need to take more time in the market to go back to look to see how price moves, you'll realize that you what happens on a 4 hour is going to happen on an hour. It's going to happen on a 15 minute, a 5, a 1 minute, a 10 second, a 5 second, etc., etc. It's going to happen no matter where. The idea behind it and your edge is to see and understand when it moves, look at whatever the institutional structure is, and just understand that yes, there is a higher time frame bias that is being held up until it doesn't. Okay, so if you don't follow that, it's just basically me saying this trade I took on a 5 minute, but understanding when I basically zoom out, I'm able to see from the 5 minute, a 4 minute, and an hour, or excuse me, a 4 hour and then and a daily. Okay, so what I did, and I admit, shits and giggles, I did it for. I was getting ready to go to work. I think it's obviously it might have been like the night before, but the long and the short, like this position was taken on NFP. I don't trade NFP. I never have. And if I do it out of a paper trade. Now, that has nothing to do with confidence. It has nothing to do with me not understanding or not believing in my overall trade plan and concepts. The reason I stay out is because a lot of times what happens just in general trading, the people and I myself used to fall into the category where when the market opens on Sunday, I have to be sitting in front of my computer. I have to be waiting for a certain mitigation and price to start moving in a given direction so I could jump in and I could say I was in a trade and it was running and it was in profit and I was doing well. I'm now at the point where, forgive my language, I could give two shits when the market opens on Sunday. I might look at something and analyze something Saturday, but I'm now at a point where I'm going to say, yeah, it doesn't really matter if I'm sitting at my computer when the market opens. I can be taking a nap on fucking Sunday and wake up at 6:30, 7 o'clock, and give it enough time, like an old Honda engine, to warm up and see what might be going on or what play might exist, right? So getting back to this, I looked at what gold was doing, and obviously gold is moving bullish on a 4 hour, moving, 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 moving. Well, something said, hey, I know everybody likes to follow news, but what I did was I pinched this down on a 5 minute, and then I came back, and what I was looking at was this move right here, which is why you see this marked out here. So let me just go ahead and prove that to you before you go, you're full of shit. From here to right here, right? What does the 50 line up with? It lines up with this right here. So what I did was I said, okay, at this point, at this level, right here, where you see my crosshair at, if you follow the vertical line across, I said, okay, here's a market break. This is a break, bearish. This is the last up before this down. And I just followed it. And I said, okay. Now, obviously, all of this had already occurred. This was basically retracing or making the correction back or mitigation, whatever terminology you want to use. It's all the same. It's a corrective move back. It's a retracement back. It's whatever you want to call it. Basically, highs being run and taken out. But it's basically coming back to the last point where there was a strong buy to sell, a weak to strong hand transfer. And this was basically the first area. Again, you've got another one here, right? And you've got another one here. Well, by the time I saw price, it was already here, and I was kind of looking at this schematic again from a 5 minute perspective. So for me, looking at it from a 5 minute, I just said, okay, well, here's one thing or the other. This is the last buy to sell, and if need be, this would be my protected high. However, I don't want it. We all know gold, the pip value I would have blown an account. So I said, okay, NFP is coming, but guess what? This is the corrective from this sell. This was basically the low that was put in after it broke. And I came to that conclusion because once this low was put in, yes, price did come back and tap it. You could say, oh, well, this could have been a double bottom or what, like whatever the retail. And I realize I'm retail, but that type of retail mentality that says, okay, this is a double bottom, it's going long. Well, correct. It did go long to the point where it was going to mitigate the last place that it went short. So in my mind, I said, okay, I'm going to take a 50 and I'm going to wait. But because NFP was coming, I said, okay, you already put this low in. So all I'm going to do is target this low. And this is going to be the 50. And let's see what we get. And lo and behold, NFP rolled around. It tapped the 50 and it's been running. So this again happened on the 1st of February. That's this year. And as of today, this is February the 20th. Um, where obviously it's in profit. Again, on a paper trade account, not real money. This is educational purposes. Don't sue me, but it's just the understanding, and this is one of the things where I just kind of put my trading plan and practice in motion. I could show you the trades that I have running down here. A lot of them are just probably gonna be like you're gonna say. People always say different things, but yeah, that's what it is. So the moral to this story is I just kind of like to look at different markets, refresh and test my overall trade plan, strategies, ideas. If I look at now, as we're looking at this on a 4 hour, honestly, this doesn't really look all that appealing to me from a 4 hour perspective. Because now I could at least say, okay, this was the break. This is actually the target low from a 4 hour perspective. So I would actually be looking for price to get back down here. Again, if I'm looking specifically and strictly from a 4 hour. So like if I was a not a day trader but a positional trader, this is essentially tapped greater than the 50. So the fact that I was talking about this being an invalidation, only from the perspective of the context of I wouldn't want to take a larger loss than absolutely necessary. But as you can see, notice we started from the 5 minute. So look at how big this area is. And remember, I even, questioned like, my gosh, this is a freaking huge, stop. So I'm just trying to zoom in here so you could see this a little bit better. That's quite choppy. But even in the intermediary move from this 4 hour, yeah, there's still a sell, a buy to sell in here. So in reality, this break has already come down. Yeah, I mean, theoretically, it'll still tap at some point. I know a lot of people would look at this and say, "Oh, well, that's an imbalance." It is, but the one thing that I've learned, continue to learn, is that just because there is a price inefficiency, and how price is mitigated, this mitigation doesn't necessarily have to happen right now. There's some mitigations, especially when it comes to gold and other markets, where it takes years, sometimes decades, before a mitigation that looks so obvious that is relatively recent. You would think, okay, well, within the next week or couple of weeks, that has to get mitigated. Well, just go back and study gold. I would challenge anybody to go back and look at gold from 2007, 2006, 2007, up through, honestly, through this year. Because one of the highs when gold was peaking, I want to say a year and a half or so ago, after after COVID basically allowed gold to drop down to, I want to say, 1600 and something. It was basically mitigating a zone that hadn't been touched since, I think it was like 2009. And when it spiked above 2000, it hadn't touched that area since like 2012. So just to put it in context, like just because a specific market will run or it will move doesn't necessarily mean that if there is inefficiency like this, that that inefficiency is going to be cleared within a matter of weeks, days, or even months, unless we're talking 12 plus months. So, again, just something to be mindful of. But don't want this to get too long. Just kind of wanted to get back in, do one of these. Let me know what you think. I know I'm a little wordy. I haven't done this in a while. Kind of miss doing videos on trading and setups. Again, I'm not a guru, not a millionaire. I'm an ordinary guy, just like everybody else. The only difference is, I think for the most part, trading can be enjoyable, it can be fun, it's challenging, it's not easy. I started this journey about 4 years ago, and I wouldn't, honestly, I wouldn't trade it for anything, like for absolutely nothing in the world. There's a certain amount of peace and calm once you kind of get an idea and an understanding of actually what you're doing. You've got a plan in place, and you follow that plan to the point where my mentor spoke something that resonated so well with me, but I've never heard anything more true. And what he said was, if if once you dedicate yourself to this process and the journey, and you're not looking for shortcuts, trading will actually become boring, because you're going to be looking for the same things, you're looking for the same setup, you're looking for something very specific. And when you don't it doesn't meet the criteria of that being that, that level of specificity, guess what you do? Nothing. And when it happens, it's the same thing. So it's never, I honestly feel like it's one of those things where you just kind of govern your emotions, because you're not going to be too high, too low, because again, there's a system, there's no emotion involved, because there's no extra thought. You've already done it. It's just a matter of executing when situations occur that meet your rules, that follow the plan. And if it doesn't, you don't do anything. And if it does, there's an opportunity. But even within the opportunity, guess what? You don't have to do anything. So, hope this that little tidbit helps someone out there. Like I said, I'll try to start uploading more videos. Drop a like and subscribe if you'd like to the channel. And also in the comments, just let me know what other content, what other markets you want me to take a look at. And yeah, we'll go from there. So like I said, I enjoyed it. Thanks for watching. I'll see you next time.